Another grey Melbourne autumn morning. Rain hammering the tin roofs and Bitcoin deciding to join the mood by pulling back hard. It's Sash from CRYPTOLOGIC here. While I'm dodging puddles on my way to get a longer black, Bitcoin's dipped below 101,000 Australian dollars, 71 USD, after hotter inflation numbers spooked markets overnight. But don't hit the panic button yet. There's real movement happening right here in Australia and some solid institutional signals globally that could flip the script. Let's unpack it. Starting local because this hits home for every Aussie holder or trader. The Senate Economics Legislation Committee just dropped a strong endorsement for the Corporations Amendment Digital Assets Framework Bill 2025. They're recommending it passes, which would bring crypto exchanges, custody providers, and platforms under proper financial services licensing, think AFSL style rules, consumer protections, and closing those wild west gaps we've seen exposed before. This builds on the government's push to modernize digital assets oversight. If it goes through and the committee's backing makes it look likely, operators get a clear path, license up or shape up. For us in Melbourne, Sydney, or anywhere down under, it could mean more confidence from super funds, banks, and everyday investors. I don't know where that came from. Less fear of another big collapse, more mainstream integration. But yeah, there's always the flip side. Extra compliance could squeeze smaller players and add costs. Still, the committee called it a modernisation win, and that's got local adoption watchers buzzing. This segment is brought to you by cryptologic.com.au, your go-to hub for in-depth Aussie and global crypto news. Zooming out globally, the big drivers right now are macro headwinds colliding with institutional resilience. First, hotter than expected US wholesale inflation data hit overnight, pressuring risk assets including Bitcoin. We saw a sharp pullback from recent highs near 105,000 plus AUD levels, with BTC now consolidating around 100,800 AUD or 71,000 USD. Fed uncertainty ahead of their next moves isn't helping, and geopolitical noise isn't either. But here's the counterpunch. Global story 2. Spot Bitcoin ETFs are roaring back. March inflows have topped 1.3 billion so far, with consecutive positive days after months of outflows. BlackRock's IBIT and others pulling in hundreds of millions recently shows institutions aren't running for the hills. They're accumulating on dips. That's structural demand, not just retail FOMO, helping put a floor under the price even as broader markets wobble. Third, quick hit. Broader crypto sentiment is mixed but holding, with some altcoin rallies on ETF optimism, but Bitcoin's still the anchor. Less supply on exchanges and corporate treasury buying add to that long-term bullish undertone. Time for a quick laugh before we get serious again. Why did a Bitcoin go to therapy in Melbourne? Because after all the rain and inflation dumps, it needed help holding its support level. But turns out the institutional ETFs were already booking the session. Seriously though, those flows are the real support right now. All right. The CRYPTOLOGIC takeaway. My straight read from here in Melbourne. Short term, the inflation surprise and macro uncertainty are weighing heavy. Bitcoin's dip isn't random, it's risk off mode. But zoom out, Australia's regulatory push is net positive long term. Licensing clarity should build trust, weed out bad actors, and invite more institutional and super fund money into the space. We've seen adoption ticking up already. Proper rules could accelerate that without killing innovation if balanced right. Globally, these ETF inflows scream institutional conviction. This isn't 2022 style retail mania. It's big money treating Bitcoin as a maturing asset class. Dips like this often become buy the dip moments when the flows stay strong. That said, loud and clear, I'm not a financial advisor. This is not a financial advice. Crypto remains highly volatile. Prices swing fast on news like inflation print or Fed signals. Always do your own research, assess your risk tolerance, never invest more than you can lose, and consider the full picture, including taxes and security. For Aussies watching, use this time to review your setup, self custody basics, tax implications under any new framework, and how licensed platforms might change your options. If regulation lands well, it could be the catalyst for the next adoption wave here. So, there we go. Bitcoin around 100,800 AUD, 71,000 USD, Aussie Regs advancing, institutions stacking via ETFs despite the noise. What's your read? Is the Senate move bullish for long-term adoption or just more bureaucracy? Hit the comments. I'll read them all when you write. If you're new or just passing through, smash subscribe and the bell for those Melbourne sourced updates on Bitcoin and crypto. Until next one, stay dry out there, stack smart, and catch you in the blockchain. Sash from CRYPTOLOGIC, signing off. Cheers.